All right. Today is Wednesday. Yep, I checked. It is Wednesday, September 7th, and this is a recap of the stock market activities today. Folks, I got a good one for you tonight, but we start with the breaking news. It's not really breaking, but it is happening. In the West, the heat wave that's going on in the West, specifically in California, my state of California. And to my fellow Californians, you might be aware that our state is crumbling. Crime all over the place, mismanagement all over the place, overtaxation all over the place, homelessness all over the place, crumbling infrastructure all over the place. And perhaps this is the result of our beloved and endeared governor, Kim Jong-un aka California's psycho. And of course, part of his agenda is the abrupt, keyword abrupt, transition to the so-called green energy. He wants no oil and gas, no nuclear energy at all. He wants to go all in the bet for green energy. As a matter of fact, he wants every vehicle in the state of California to be an EV by 2035. And you might assume that our power grid and our infrastructure is ready for such transition without oil and gas at all. Well, you'd be sadly mistaken, and this state is paying a dire price for that. But of course, this is the lunacy of Kim Jong-un. And I don't see any hope at all because, number one, the zombified voter of California will vote for Kim Jong-un again. And you can't really blame them because what is the alternative? The clown Republican Party, well, they pretty much bailed out in the state of California. They have no solutions at all. And they're giving us an opponent to Kim Jong-un. The opponent has no plan at all talking points, no solutions at all, an absolute clown. And this is the result.
Tonight, the deadly double threat scorching California, a still out-of-control wildfire in the northern end of the state, and an unrelenting heat wave now bringing the highest likelihood of rolling blackouts after 6 days of sweltering temperatures.
It's just brutal outside, just absolutely brutal.
In the small town of Weed, 2 were killed as this explosive blaze, fueled in part by hot weather, tore across roughly 100 homes.
I've just seen fire come out of the sky.
The heat wave slowing firefighters who across the West are tonight responding to more calls for help as 46 million bake in what feels like an oven. After nearly a week of the brutal broil, the extended forecast offering little relief for major cities, still well above triple digits.
It's going to be like 100 plus.
As temperatures soar 20 degrees above average, more than 100 daily records will be set after one of the worst heat waves in Western history. In Bullhead City, Arizona, winds knocked out power to 36,000, where it could be 113 degrees today. The intense demand for power to cool homes in California could tonight overwhelm the fragile power grid on the brink for days.
And of course, if you live in the state of California, yesterday was an intense day because we got so close to the power grid failing in the state of California, and millions of households would have gone in a blackout. But luckily for us, the state sent emergency texts to everybody to lower the thermostats, stop using electricity, yada, yada, yada. What do you know? Crisis averted for now. Keyword for now. We still have 2 intense days coming. We'll see what happens. Maybe we will get more calls from our beloved governor once again to tone it down on the electricity. Accept more heat. Turn up the thermostat while he lies through his veneers. Take a look.
California and many other Western states are experiencing simply unprecedented temperatures. In fact, this heat wave is on track to be both the hottest and the longest on record for the state and many parts of the West for the month of September. Californians, you've stepped up to help in a big way to keep the lights on so far. But we're heading to the worst part of this heat wave, and the risk for outages is real and it's immediate. These triple-digit temperatures throughout much of our state are leading, not surprisingly, to record demand on the energy grid. Everyone has to do their part to help step up for just a few more days. Individuals, the state, industries, business, all doing their part to help reduce strain on the grid. Now, here's specifically what you can do. In the early morning hours, particularly tomorrow and the next day or so, pre-cool your home. Run your air conditioning earlier in the day when more power is available. And we encourage you to close your windows and blinds to keep your home cool as well. And today and tomorrow afternoon after 4 p.m., in particular 4 p.m., please turn your thermostat up to 78 degrees or higher and avoid to the extent possible using any really large appliances. You can visit flexalert.org to learn more about what you can do. Californians, you've rallied before, and we can do it again. Keep it up.
Okay, point number one. With that voice, you know the guy is coked up, big time. And with the eye twitching thing, that's the Adderall. And then he's wearing a sweater, which means that that room was ice cold. I bet his thermostat was at 65, while all of us are told, get it to 80 to save energy and to save the state. Wait a minute, I thought with the insane taxes we're paying, at least we have a power grid capable of serving everybody without lowering the standard of living. But hey, you gotta take a shot for the team, right? To save the planet, you gotta live in misery and turn up your thermostat while our beloved governor and his sponsors, the oligarchs, enjoy very nice and cool temperatures at their homes. 65, baby. Same story with the French laundry. We have to, muzzle up and not see our families while he goes out with his buddies and sponsors to eat caviar and truffled fries. And I love this post. The guy says, I am stress testing the grid by running everything. I want to make sure that we're ready to handle 40 million EV cars in 2035. And he set his temperature at 66. That is still 1 degree higher than the room Governor Kim Jong-un Newsom was at. So the message is clear. Accept more inflation, and most importantly, lower your standard of living. Expect less and be happy. And then let me talk about this because in yesterday's video, I took the gloves off and I offended a lot of people. So I got to tone it down a little bit in this program tonight because these people. And we're talking about the Saliva Ukraine crowd, who, by the way, last year thought that Ukraine is in Texas, or better yet, some of them thought that Ukraine is a candy bar. Now, all of a sudden, they're a bunch of geopolitical experts, and they say, hey, Maverick, why are you repeating Putin talking points? The sanctions are good. Oh, really? Here's a little quiz for you. And I already helped you out, by the way, by eliminating 2 choices. To punish your enemy, this is for $100,000, by the way. To punish your enemy, you push the price of their commodity, most important source of revenue, higher or lower. Think about it. Take your time. Call a friend and let me know. And spoiler alert for you, the sanctions, the price caps, they push the price of commodities higher, specifically oil and gas. This is good for Russia. What we should have done instead is tackling inflation. The Federal Reserve, Jerome Powell, back in February, March, should have been so aggressive in tackling inflation down. By this time, crude oil prices would have been at the 60s. And guess what? Now that finally the Fed is doing what they're supposed to do, oil prices are going down despite all of the tailwinds. I'm going to talk about that and a lot more in the commodities segment of this program. But now that oil prices are going down, guess who's hurting? Yep, Putin. So Jerome Powell is Putin's biggest enemy. The sanctions, on the other hand, are actually an ally. But hey, you cannot fix stupid, right? Now let's talk about the stock market because here's the breaking news that we got today. The Dow closes more than 400 points higher. The Nasdaq snaps 7-day slump as Wall Street shakes off rate hike concerns. Oh really? Or was it the ECB about to impose a massive rate hike so the dollar went down, the algos reacted and they pushed equities higher? You know the deal. But maybe, at least for a few days, we're in the shake it off Taylor Swift mode in the market. Speaking of, since we're talking about green energy and heat and all that stuff, saving the planet, and Taylor Swift, who I am a fan of, by the way, but I don't want to hear any lectures from Taylor Swift about saving the planet and how we have to conserve energy and water and yada, yada, yada. Because so far this year, Taylor Swift took about 170, if not more, private jet trips. But I guess we have to shake it off, right? We gotta give her a pass. But this is the important part. The flights were said to have totaled 8,293.54 tons of CO2 emissions, which is 1,184.8 times more than the average individual. So right now, so far this year, Taylor Swift produced more emissions than I will produce in my entire life. So there you go. And now that we offended Gavin Newsom's fans, we offended the Saliva Ukraine fans, we offended Taylor Swift fans, I'm on a roll. So let's up the ante and offend the Apple sheepies too. And here it is, in focus tonight. The greatest innovation in the history of the planet. What are we talking about? We're talking about the iMob Incorporated, a company that ceased to innovate anymore. After Steve Jobs, forget about it. So without innovation, how does Apple continue to survive and thrive? The answer is via the racketeering operation, the monopoly they call the Apple Store, the services revenue, aka the rent.
Here for the rent.
The 30% the iMob charges anybody who does any transaction using an iPhone, iPad has to pay the iMob a kick of 30%. If you're an entrepreneur, make sure you have to pay the government their 40%, right? But you also have to kick 30% off your revenue to the iMob. Now, what do you have left? And today we got an example of the lack of innovation by the iMob. They take everything for granted. Why the need to innovate anything when you have sheepies who are going to buy the products anyways, and the racketeering business is doing beautiful? Today we got the revelation of the new iPhone 14 Pro. And, wait for it, the iMob took a leap forward in their innovation endeavor. And here it is. The new iPhone 14 got an ultra-wide camera. Wow. I never seen this one before. As you can see above, it looks a lot like last year's model from the back. But these are some noteworthy changes. Unsurprisingly, the cameras are even better. Wow. They made the cameras better. Wow. Apple highlights camera improvements every year and include a 48 megapixel sensor for even sharper photos and to let in more light. Wow. The big changes are on the screen and inside. There is a new satellite connectivity, for example, which allows you to point the phone toward the satellite to send a message or call emergency services where you don't have cellular service. Whoa. The Pro also boasts an always-on display that lets you quickly peek at notifications, see what music is playing, track flights, and more without having to wake up your screen every time. Wow, I've never seen that one before. You can just leave your phone on your desk and glance over whenever you want to see what's going on. It's a similar feature that has been on Android phones for years. And then they got this, they call it the pill, which is, the notch? But no, the iMob calls it the dynamic island on the phone. So what is that all about? There is also a new pill-shaped cutout that replaces the blank notch that had previously housed the camera and Face ID sensor. The camera and the sensor are still here. They're just hidden. It can show you notifications or status updates and even the album art of the song you're playing. Whoa. You can tap that pill to view the song you're playing or more information about a notification that is in the space. Wow. Oh. Apple calls the feature Dynamic Island, quote unquote, and says it will work with alarms, AirDrop, flight alerts, AirPod pairing, and charging indications, notifications about the status of your Lyft ride, and more. Now, this is a piece of trash, the most disappointing iPhone reveal ever in history. But the good news is the iMob were reasonable, at least. They're not going to charge more. Same price, because even the iMob realizes this is a piece of trash. And this piece of trash will cost you $999.99, and then it goes up from there. But there is a catch. In the new iPhone 14 Pro, Apple kills the SIM tray. So that card, where you put it in, you push it back in the phone, and you're good to go. When you travel, you buy a new one, take the old one, put it in your pocket, you place the new one instead, and boom, you're good to go. Not going to happen anymore. So what do we do here? Here it is. In practice, that is a decision that will have a few effects on how you use your iPhone 14 if you decide to upgrade. For one, you won't be able to simply transfer the SIM from your current phone to your new device. Instead, you will need to either call your carrier to complete an enrollment process online. Many people, when they travel, tend to buy local SIMs as a way to save on data roaming costs. That is something that won't be an option if you buy an iPhone 14 in the United States. Thankfully, there are plenty of eSIM options like Airelo. So there you go. Is it an upgrade? Is it a downgrade? Who cares? The iMob wants your money. Put your blindfolds on and upgrade. Otherwise, you're not cool enough. I know what you're going to say. Your old iPhone looks the same as the new one. So why would you upgrade? Have you forgotten about the pill? Have you forgotten about the dynamic island? What are you, poor? You're not cool enough to have your own dynamic island?
You look poor.
Anyhow, folks, now that we offended everybody, whoever is left, let's move on and cover the stock market information for you. We begin with the closing of the indices today, and here we go. The Dow Industrial Average closing in the green by 435.98 points, or a gain of 1.40%. The Nasdaq leading the pack with gains of about 247 points or 2.14%. The S&P 500 also in the green by 71.68 points or a gain of 1.83%. The sector's performances today led by number 1, capturing the gold medals, cyclicals, number 2 for the silver, utilities, number 3 for the bronze, communication services. And the only laggard of the day was energy. Crude futures were down big. We'll talk about that in a second, but here it is. The advance to decline ratios, NYSE 81% advancing versus 17% declining. The Nasdaq 73% advancing versus 24% declining. Now usually, not always, but usually, when we have extended ratios to the upside or the downside, the very next day, we get the opposite reaction. Moving on to commodities, a massive down day for both the WTI and crude. The WTI was down over 5% today. Likewise, Brent was down almost 5%. Gasoline was down over 4%, almost 4.5%. Natural gas down big, almost 4% for the day, while heating oil pretty much flat. Now, here's an important point. I remember a viewer, and maybe if you're listening right now, you know that you asked the question, but I cannot find it for some reason. I took a screenshot when you wrote it, but it seemed that I lost it. In essence, the question is, hey Maverick, you say that inflation has always been a monetary phenomenon, and what really moves commodities prices, inflation, disinflation, is the monetary policy. But you also say that supply disruptions, for example, when OPEC increases supply or cuts supply, that also moves the prices of crude oil and inflation up or down. So which one is it? Perhaps this comment from Liz Young also needs to be addressed because it revolves around the same train of thought. She says that the WTI is down to $82 a barrel, Brent down to 88, both down 20% since July. Not sure exactly what's driving it. Even the New York Fed says the price drop is not easily explained by demand and supply dynamics. But if a spike in oil is a recession warning sign, this is a welcome move. I don't know what she's talking about here, but let's get to the point. The point is, it seems that even the Fed suggests that the supply and demand dynamics favor higher oil prices. Even OPEC, by the way, the Saudi energy minister, came out and said that the price reaction in crude oil futures doesn't make sense at all. The demand is still hot, and I got the power to reduce supply anytime I want. So why are we seeing crude oil futures crashing despite the enormous and powerful tailwinds? Folks, I made a video last year which got about 250,000 views so far. In that video, I explained to you in details that yes, oil prices, natural gas prices, commodities prices in general move up and down based on supply and demand dynamics. For example, if we have a production cut by OPEC, we see a reaction to the upside, and vice versa. We also see temporary episodes of supply push inflation in the case of natural disasters, for example. But these episodes are resolved quickly after the disaster is over. However, what moves inflation and commodities prices in a sustainable way up or down is the action by the Fed. The monetary policy. When the Fed eases and prints an insane amount of money, overstimulating the economy in a period where the economy doesn't need stimulation, we get inflation. And during that episode, you see futures, commodities prices surging higher, despite the headwinds. You see, when Genius Powell came out in 2020 and said he wants higher inflation, at the time the discussion was, well, we have the thing shutting down everything, so the demand is not here. Why are oil futures surging higher? Did not make sense, right? But it did for me. It's all about the monetary policy. Likewise, now we have massive tailwinds for crude to move higher, but it is crashing down. Why? Because the Fed is tightening the monetary policy. Magic, isn't it? When everybody said that oil is a supply problem, the inflation in oil is a supply problem, it's a demand problem, it's a yada 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 problem. No. It is a monetary inflation problem. If you watch that video, you remember me saying, watch how magically oil prices will crash the moment the Fed starts tightening the monetary policy as they should. Now, to counter this massive headwind of the Fed tightening the monetary policy, we need a bigger supply shock to move crude oil prices higher. Do we have any of these possibilities in the near future? The answer is yes, but we need a massive shock to move these crude prices higher. And at that point, let's say if crude makes it back to 100, the conversation becomes, does the Fed respond by tightening even more? Because that could plunge the economy in a deep recession, if not a depression, and it might not have a severe impact on the prices of crude oil in the near future. Keep that in mind. We have a lot of these tailwinds that could cause a massive supply shock. For example, what if Turkey and Greece go at it in a new war? Today we heard from President Erdogan of Turkey pretty much hinting that he's going to invade Greece. That will cause a massive shock. You will see traders flocking back to oil futures. We will see crude pushing higher again. Another important tailwind is what's going on with Russia and Ukraine. Now, the Treasury Secretary, she's absent now, Janet Yellen, because we all know she's going to get axed after November. So now her deputy, the genius that he is, he says, hey, the oil price caps on Russian crude, that will actually be good for consumers in India and China because they can buy even cheaper barrels. What he's not factoring in, A, we're going to have a complete shutdown of supplies from Russia to the European continent. That's number one. Number two, Russia could respond to India and China by halting supplies. That is, of course, assuming that China and India will go with this program of oil caps. And let's hear from Sadat al-Husseini, who's, I believe, a former VP in Aramco, so he knows a thing or two about the business. And he has a dire warning. While we're seeing crude oil prices crashing right now, he says in the fourth quarter of this year, we could see them rebounding significantly higher. Take a look.
The big problem isn't just now, it's what's going to happen later in October, November, when Russian oil supplies get out of the market. That's when they will be poised to do a lot more, I believe. But right now, it's a small adjustment.
And obviously, this came after the G7 is agreeing to basically cap the price of Russian oil on the market. Is that something that you think will work, will inflict pain for those, I guess, that go along with it? They'll get cut off from Russian oil.
Well, Sarah, this is really a big deal because we're talking about the third largest economy in the world, which is Europe. And we're talking about the largest gas reserves holder and a nuclear power, which is Russia. And when they come into a conflict like this is going to be a real big issue for a long time. So trying to put a cap on prices, I don't think it will work. I don't think the Chinese or the Indians or anybody out there buying Russian oil is going to want to see a price imposed on them. They'll negotiate their own prices. But the problem is going to be beyond this. It's what do you do in 2023, 2024? What do you do when Russian oil and gas are forced to stay out of the market? The world is going to have to find alternatives. And, this isn't Afghanistan or Iraq. This is Russia. This is a big deal.
Yeah, what could go wrong, right? If we push a nuclear armed country to the corner, nothing will happen, right? The Russians will just submit and say, okay, boss, I'll do whatever you want us to do. Price caps, no problem. Continuing.
So where do you think this all goes in terms of the impact on prices, both on oil and nat gas, and the effort to find alternative sources?
Yeah, what we've learned is alternative energy just can't cover everything. Europe, between nuclear and alternative, can only cover 25% of the requirements. 75% of the energy in Europe is still oil, gas, and coal. So that's going to be a reality for a long time, not just for Europe, but across the world. And that means prices will stay high as long as the Russian supplies and the rest of the world are at odds with each other. It's got to be resolved, or we're going to see high prices for many years, well into the end of the decade.
Boom. There we go. The dynamics when it comes to supply and demand support much higher oil prices, not just today, not just tomorrow, not just next week, not next quarter, but for years to come. But so long as the Fed is tightening the monetary policy, crude oil prices will get hit to a certain degree. The moment the Fed lift their foot from the tightening pedal, you will see crude prices bouncing higher so fast you're not going to even believe it. So for the peak inflation crowd, be careful what you wish for. Most importantly, for the Fed, if you're even thinking about toning it down, toning the hawkish rhetoric down, but most importantly, toning interest rate hikes inflation down, you might actually cause crude to snap back in an aggressive fashion. And so fast. So watch out here, Fed. Back to the futures. What about softs? The market is rebounding, so lumber is going to rebound. The correlation is clear. Today, lumber futures gained almost 4%. Likewise, sugar rebounded higher and gained a little over half a percentage point. But we have declines across the board, led by coffee, OJ, cotton, cocoa, all down. When it comes to metals, the dollar was down, euro was higher. Why is the euro higher? The answer is the anticipation of aggressive and hawkish interest rate hikes by the ECB. When the dollar goes down, metals move higher. So gold, silver, platinum, palladium, all higher, but the mystery remains copper. Copper should have bounced higher today. Copper was up yesterday when the dollar was down. Usually we have an inverse relationship between the dollar and copper. So copper is acting a little weird, as if copper is saying, I'm not believing the down day in the dollar. We'll see what happens. When it comes to meats, flat action for lean hogs futures, yet we have modest declines for live cattle futures. On the other hand, feeder cattle futures down by over 1% today. When it comes to grains, big rebound for wheat, gaining almost 3% for the day. Likewise, soybean meal, with gains of about 1%. The rest are down, led by soybean oil. The crash in soybean oil continues to go on. And the reason is we're seeing some sunflower oil coming out of Ukraine. So the demand for soybean oil goes down. Moving on to the options market, the big casino, what's going on here? The volume remains subdued, and most importantly, people are still buying puts. So there is no conviction here despite the rally. Regardless, at number 1, Tesla, the souffle, the hottest table today, with about 1.6 million contracts traded, about 50.5% of those were calls. Apple at number 2, with around 1.5 million contracts traded for the day, about 55.5% of those were calls. Number 3, Amazon, at around 750,000 contracts, about 43% of those were calls. So they're buying more puts in Amazon. Not a good sign for the sustainability of the bounce that we got today. Anyhow, let's move on to the unusual activities that took place in the casino today. We start with the ticker AAPL Apple. Somebody's fading the rip that we got after the disappointing reveal of the iPhone 14 Pro, and they bought the 147 puts for the expiration date, September 16th, with expectations that the name could move down and lose more than 6% of its value. They paid around 70 cents a piece to enter this trade, all in all spending around $1.2 million. And then what about the ticker VERU, Vero? The name was down big today. It's a biopharma name, but somebody's bidding for a rebound here. They bought the 14 bucks calls for the expiration date, October 21st, with expectations that the name could rebound and regain about 22% of its value by then. They paid around 4 bucks a piece to enter this trade, all in all spending around $4 million. And then we have the ticker FMX. This is a Mexican company, a subsidiary of Coca-Cola. Somebody sees upside for this name. They bought the 70 bucks calls for the expiration date, October 21st, with expectations that the name could gain more than 6% by then. They paid around $1.45 a piece to enter this trade, all in all spending around $1.5 million. At the bottom of the table, what about the ticker ALT, This is for a company called Altimmune, another biopharma name. The name is a major winner year to date, but it is getting absolutely absurd and it is ready for a pullback, so I did follow this trade. I'll explain in a second, but somebody bought the 19 bucks puts for the expiration date, October 21st, with expectations that the name could dive down and lose more than 6% of its value by then. They paid around $3.40 a piece to enter this trade, all in all spending around $2 million. Now, when we look at the chart, this is a daily chart for the ticker ALT. Look at the MACD indicator. It is really overextended, but it is pulling down, ready to cross to produce new bearish momentum. Likewise, the RSI has been extended for a long time now, and it is pulling down, meaning we're about to see a correction in this name. And if we do, using the Fibonacci levels, we can go down all the way to the 16 number, which means the company could lose around a quarter of its value by the end of the correction. And therefore, I did follow this trade. We'll see what happens. But for now, we're moving on to the heat map analysis. What do we see here? Today, we got an algorithmic bounce. What does that mean? The euro went higher, dollar went down, gold bounced. Also, Madam Brain Dead from the Fed, she spoke with both sides of the mouth. So treasury yields went down. All good news for the stock market. And therefore, we have this algorithmic bounce, which means the algos bought some stocks in addition to short covering. Therefore, everything is up with very few exceptions. Most importantly, energy. Energy is down big. Why? Because the action that we got in crude oil futures. And again, you could say the dollar is down. Why is energy down? The momentum right now is to the downside in energy. That's going to change, but it requires a massive catalyst, a massive supply shock, as we talked back in the commodities coverage. Now let's cover some corporate news, and we start with the ticker LMT Lockheed Martin. I'm long the name. I don't see a recession for Lockheed Martin. Of course, if we have a peace deal in Ukraine, Lockheed Martin stock will go down big. So that is the only headwind that I see in the horizon. But we have some bad news here. The Pentagon suspends F-35 deliveries after discovering materials from China. The Defense Contract Management Agency notified the F-35 Joint Program Office at the Pentagon on August 19th that an alloy used in magnet contained in the F-13's turbomachine pumps came from China. Lockheed Martin builds the overall aircraft, but the turbomachine is produced by Honeywell. What's going on with Honeywell here? Well, the representative from the company says Honeywell remains committed to supplying high-quality products that meet our. We are working closely with the DoD and Lockheed Martin to ensure that we continue to achieve those commitments. In other words, Honeywell got caught cheating. We're paying an arm and a leg for these jets. Put some American-made equipment in it, for the love of God. Why are you cutting corners here? Maybe robbing the taxpayer? I don't know. And then we have news from VW, who's planning to do a new IPO for Porsche this time around. Now, this should have happened in 2020 or 2021 max, because back in 2020, 2021, that was the heat of the mania, when everybody was buying Porsches and Rolls-Royce and Bentleys. But that slowed down a lot recently. So I believe this IPO is too late to the party, and perhaps an upcoming shorting opportunity. And the last piece of corporate news we got here tonight is from the big Google. You know, under the dictatorship of Sundar Pichai, he moved Google away from the consumer. Who cares about the consumer? Who cares about the consumer? Who cares about the content creator on YouTube? He's just going to appease and move closer to the deep state, the oligarchy, the CIA, the FBI, other dictatorial regimes in the world. That's who Google is selling out for. And of course, they're cracking down on their employees, because when you shift the focus of the company from the consumer and the content creator and you cater to these entities, the deep state and the likes, well, you start losing revenue. And when you start losing revenue and your growth slows down, well, you gotta get rid of employees. But for now, Google is cracking down on employees' travel, telling managers to next happy hours and other team meetups. No more abuse of corporate cash. And the next step is layoffs. So watch out here if you work for the big Goog. Watch your back. Next, we have the heat map for the ETFs, green across the board with exception of energy, natural gas, commodities that were down, but everything else in the green. And the gains were led by technology, but also the XBI, biotech, bouncing back. Value, growth, doesn't matter. Green across the board, and this is the product of algorithmic short covering. So let's move on to charts. I'm going to start with the SPY, the S&P 500 30 minutes chart. Yesterday, I warned the Johnny-come-lately bears, watch out here, you're too late to the game. They're going to rip your face. We're due for a bounce. The chart never really said goodbye to the important support of 391. So today we got the massive bounce that got us all the way to the resistance, now support, maybe still resistance, who knows, of 398. Now the 30 minutes chart is getting a little overextended, but the hourly still has more room, so we'll see what happens. But at some point when this bounce becomes too extreme, when the shorter end charts, we will see a pullback. That could be driven by commentary from Jerome Powell. That could be followed by decisions from the ECB. We'll see what happens. But for now, is this the all clear for the bulls? The answer is not even close. Here's the daily chart for the continuous contract for the S&P 500. The good news is we're above the trend line once again, and we're above 3,960. Also, the volume moved down. The momentum indicators are curling back upward. The RSI, the MACD. All of these are good signs for the bulls. But here's the problem. Even if the bulls go all the way back to 4,100, they could stop there and move down. Why? Because yes, now we got the head and shoulder formation, but if they go all the way to 4,100 once again, they could form a larger head and shoulder formation. And this is what the bears are hoping for. I'm hoping for a rebound that gets us all the way to 4,100, and then it fails from there. Because A, that will give us a better opportunity to short again. B, it will leave the surprise element to the downside, not to the upside as it is right now. The bulls, of course, are hoping that they're going to crack above 4,100 and close above that for the week, and then they get the all clear signal. We'll see what happens. I doubt it, but here's the Q's 30 minutes chart for the NASDAQ. Yesterday, the bears talked about the bear flag and how the Q's will go down. I said not too fast. The Q's still holding at 294.33. It appears that we have a saucer bottoming formation. Today, we got the bounce. It did not get us all the way to my number, at least, of 300.72, but it got us to the number that many technicians have, which is 300 flat. and the chart stopped right there. Is it running out of gas? Is this all there is? Well, that depends on what's about to come next, which is number one, what Jerome Powell is about to say, and of course, the decision from the ECB. But most importantly, for the technicians, you got to look at the dollar index and yields. If they continue to move down, then we have further upside for the Qs. And here's the daily chart for the continuous contract for the Qs, the Nasdaq. The good news is the bulls are now above 12,207 as support, but they're not quite above the trend line yet. But the volume is moving down. The momentum indicators are curling back up. All of these are good signs for the bulls. But there's a lot more work that has to be done for us to say, okay, this is the all clear. We're not going to go down in a retest to the June bottom, which is the consensus for now. The IWM, the Russell 2000, 30 minutes chart. What's going on here? It moved higher today. It never lost 178.60 as support to begin with. And now it went all the way closer to the resistance at around 183.25, also known as 183.25. Is it going to pull down tomorrow? That depends on what Jerome Powell is going to say. If he caters to the bulls and comes out a little bit dovish, we could see more gains to come, more short covering, the same mania we saw back in the summer, meme stocks leading the gains, etc., etc. Which is a sign, by the way, that Jerome has to be aggressive and not let go of his hawkish rhetoric. It's too early right now to do that. What about the dollar? Here it is. The dollar was down today, and it appears that by looking at the MACD indicator, the dollar is about to cross, producing red impressions in the histogram, aka bearish momentum. That doesn't mean necessarily the end of the rally in the dollar, but it means at least a stop, a pause in the impulsive rally. That could be via consolidation, that could be via pullback, that could be via flush down. There are many possibilities. But for now, the fundamentals support a higher dollar. The technicals, that's a different story. And so long as the technicals support more downside for the dollar, that is good news for equities. It is also good news for gold. Gold bounced higher today. It is above the important support at 1,685. But can it hold? The technicals are on the side of gold, not the dollar. The fundamentals, however, are on the side of the dollar, not gold. And here is the 4 hours chart for crude oil Brent. We talked about the importance of 94.47. The bulls don't have the energy to push Brent oil above that number. When the buyers stop showing up, the sellers do. And the sellers got us all the way down below 90. So now we have to look for support. And for that, we zoom out to a daily chart. We can cheat and use Fibonacci's numbers. And that number would be all the way down at around 81.5. But my number, the maverick number, is 85. We'll see which support is going to work out. The oil bulls must hope that 85 will be the number. Moving on to the daily chart for the 10-year yield, we got a down day, not a reversal candle yet, but look at the momentum indicators, the MACD, the RSI, they're getting a little overextended here. So we're due for a pullback. We're due for consolidation in the bullish scenario. We could work out these overbought conditions via either a pullback, flush down, or consolidation. The bulls always hope for consolidation. The bears always hope for a pullback, because a flush down can resolve these overbought conditions, really fast, and we see a pickup and dip buyers showing up right away. For now, the down day in the 10-year is pushing equities higher. I'm not going to call it a reversal yet until I see the chart losing at least 3.2 as support. So when we see 3.19, 3.18, then we're going down all the way back to 3%. That will be a decent pullback, which will allow equities to move higher. Otherwise, despite the pullback today, next stop will be 3.5%. Here's the weekly chart for the TLT. Yes, the TLT was up, but hold your horses, TLT bulls. You're not out of the woods yet, not even close, because you're still below the important resistance, used to be support, at around 109.5. Get me above that, close the week above that, and then I'll believe your argument. Here's the VIX 4 hours chart. Look at what happened. The MACD indicator fooled all of VIX bulls, thinking that we're going to have a crossing and a pop higher in the VIX. Yet the VIX failed to cross in the MACD indicator and pulled down instead. The RSI is still showing a negative divergence, indicating more downside to come. That could be possible. However, while the short-term charts show us a potential for more downside for the VIX, the weekly chart says otherwise. This is the weekly chart of the VIX. Look at the MACD indicator. It is going to cross. It's about to cross. Now, is it going to happen this week? Is it going to happen next week? Is it going to happen the week after next? Who knows? But we know that time is really important. We are due for a bullish cross, which means despite the negative trend in the VIX, for now, we're due for a massive pop in the weekly. We have plenty of catalysts that could pop the VIX higher. CPI, the Fed's decision, of course, and many more. Apple, a daily chart. What's going on here? Despite the rebound higher that we got today, it was pretty much a lukewarm reaction to the release of the iPhone 14, and the chart did not even make it above 157, an important support, now resistance. Get me above 157, and then I'll believe the argument by the bulls that we're due to go higher all the way to closing the gap above. Otherwise, in all likelihood, we could go down again all the way to 150. Tesla, an hourly chart. Yesterday, we gave the bulls the benefit of the doubt that they will get us above 280. But can they close the week above 280? That's a different story. My hunch is they will fail. Bitcoin, tulips, 4 hours chart. What's going on here? We have some repair job going on here, but we're not even all the way above half of the body of the reversal candle, so we're not out of the woods yet. The chart needs to pop above 20,000 aggressively, and then we have a signal that Bitcoin is due to move higher. For now, the assumption is, despite the pop that we got today, the trajectory is to the downside. And lastly, moving on to the conclusion of this video, what do we have on the economic calendar tomorrow? We have initial jobless claims, we also have consumer credit, but most importantly, we have the big dog, the chairman of the Fed, Jerome Powell, speaking tomorrow. All eyes on Powell. He can move the market higher or to the downside. So buckle up your seatbelts. But folks, this is all I got for you for now. Thank you for listening. Thank you for watching. I will talk to you again tomorrow.
Things happen because human beings make decisions, they commit acts, and that makes things happen, and it creates a snowball effect that their world around them causes other people to make decisions. The cycle continues, snowball keeps rolling.